Banks, they're everywhere and we often take them for granted. They're like the awkward family reunion of the financial world. You might not always want to deal with them, but you know you have to. But here's the thing. Banks are kind of a big deal. They play a crucial role in the economy and in our daily lives. They're the gatekeepers to our financial lives, the middlemen in the money go-round. They help us manage our money efficiently. Think of it this way, you get paid, you put your money in the bank, right? It's a safe place to store your hard-earned cash. Well, that money doesn't just sit there looking pretty. Banks use it to keep the economy moving. Banks use that money to do all sorts of things, like give out loans to businesses and people who need a little extra cash. This helps create jobs and opportunities. Without banks, let's just say things would get a little complicated. Managing finances would be a lot more stressful. Imagine trying to buy a house with a suitcase full of cash. It would be a logistical nightmare. Banks make our financial lives a whole lot smoother. They provide the tools and services we need to navigate the complex world of money. Okay, so you've got your paycheck and like a responsible adult, you're not stuffing it under your mattress. Instead, you're thinking ahead. You deposit it into your bank account. But what happens next? Does it just sit there, waiting for you to spend it? Does your money just chill there, sipping tiny margaritas by the virtual pool? Not quite. It's actually quite busy. Banks take your hard-earned cash and lend it out to other people who need it. Think mortgages for houses, loans for businesses, and more. Even that little cash advance your friends swore they'd pay back. Your money is always on the move. Banks have to be careful who they lend to, assessing risks and ensuring they make sound decisions, making sure they'll get their money back, with a little something extra, of course. There's a system here, a well-oiled machine, a method to the madness. It's all about balance and trust in the financial ecosystem. Let's talk about that little something extra interest. This, my friends, is where banks really rake it in. When a bank lends out your deposited money, they charge interest on those loans, a percentage of the money borrowed. Think of it like renting out a power tool. The interest rate a bank charges depends on a lot of things, the type of loan, the borrower's creditworthiness, and even the overall economy. But the basic idea is the same. Banks charge interest on loans, and that interest is a big chunk of their profit. Section 4, fee, fo, fum, the cost of convenience. Interest on loans isn't the only way banks make money though. They've got a whole bag of tricks up their sleeves, and it's usually adorned with the word fees. Some common fees you might encounter include monthly maintenance fees, ATM fees, overdraft fees, and wire transfer fees. These fees can really add up, so it's important to be aware of them and to compare fees at different banks before you commit. Think of it like this. Banks are essentially running a business, and running a business costs money. Section 5, beyond the vault, more than meets the eye. Banks have expanded their repertoire over the years. They've gone from simple money holders to financial supermarkets offering a smorgasbord of services. Banks have dipped their toes into the world of investments, insurance, credit cards, and financial advice. Navigating the complex world of money can be about as fun as a root canal. Section 6. Taming the Financial Dragons, Risk Management 101. Lending out money is all well and good, but it's not without its risks. Banks face a multitude of potential pitfalls every day. What happens if someone doesn't repay their loan? This can lead to significant financial losses for the bank, or if a whole bunch of people decide to withdraw all their money at the same time. This scenario can cause a liquidity crisis. That's where risk management comes in, the financial equivalent of strapping on your seatbelt before a roller coaster ride. It's all about being prepared for the unexpected. Banks have to be very careful about who they lend money to and how much they lend. They assess the creditworthiness of each borrower meticulously. They also have to keep a certain amount of money on hand, called reserves, in case of unexpected withdrawals. This ensures they can meet customer demands. Banks have whole departments dedicated to assessing and managing risk. These teams work tirelessly to safeguard the bank's financial health. They use complex algorithms and models to try and predict the future, or at least the financial future. This helps them make informed decisions and mitigate potential risks. Section 7. In conclusion, banks, the good, the bad, and the bottom line. So, there you have it, folks. The world of banks, in a nutshell. They're the financial institutions that keep our money safe. facilitate our transactions, and provide us with a range of financial products and services. Sure, they can be a bit confusing, and those fees can be a real pain in the wallet. But love them or hate them, banks are an integral part of our economy, and understanding how banks work is the first step to taking control of your own financial well-being.